Investing in ag tech, the insider tips. What are the differences between the various types of investors and funding groups? What are they looking for, and how do you pitch your business idea to capture their attention and win their buy-in? I'm going to hand over to this extraordinary panel.
Cool, thank you. Kia katoto, good afternoon everyone. My name's Dean Tillard, I'm a venture partner for Finistere Ventures based in Palmerston North in New Zealand. Finistere Ventures is a San Diego-based agri-tech venture capital firm with offices in the US, Dublin, Jerusalem and New Zealand. Has 6 investments in New Zealand and is really very keen to do something in Australia, so really great to be here. I think what's really cool about the panel that we have here is there's a great diversity of investors, sort of proving that there is no one investor. There's different geographies, different stages and different interests. So we are going to kick off just by asking each of our guests here to quickly introduce themselves, and then I will try and marshal us through. We've only got 30 minutes and I'm really keen that we do see the differences between these investment groups.
Yeah, hi. I'm Ashish, Khetan, and I run Indigram Labs Foundation. We are a leading accelerator for ag and food startups in India with about 40 startups. We typically do up to 100K in about 10 companies a year. But our association in ag and food goes back 20 years. We've created this entire ecosystem where we've created a network of 500,000 small and marginal farmers on the ground, giving them best practices around what needs to be grown, where it needs to be sold. Physical infrastructure in about 70% of the geographies across India. We also have a market intelligence arm called AgriWatch, which is into market intelligence for non-perishable commodities, which tells you buying, selling patterns, government interventions, weather predictions, etc., when to buy, when to sell. And we're also looking to set up a $30 million fund, which hopefully should be active by the end of this year. If that goes through, then probably we'll be making a couple of million in follow-on funding through some of the companies coming out of the accelerator. So basically, we address the entire vertical for ag and food and allied services as well, which includes poultry, dairy, and fisheries as well, to keep this sector a bit broad. And our focus has been agri and food all throughout. Thank you.
Good afternoon, everyone. And my name is Robert Williams. I'm at Artesian, and please just excuse my croaky voice. Artesian is an alternative investment firm. We have a venture capital investment arm where we act as both an early and late stage VC investor. We're particularly active across the broader Asia-Pac region and have more than 400 investments now across our broader VC investment portfolio. We focus on a number of themes and verticals that include clean energy, medical technology, and agri-food. In the agri-food space, we're currently managing 2 dedicated funds with around $60 million allocated. We've made around 50 investments over the last couple of years. And relevant, I guess, to the group today, the largest strategy that we are managing is the Grain Innovate Fund, which is a partnership with the Grains Research and Development Corporation. It's a $50 million pool of capital where we're actively looking globally for early stage investment opportunities that have the potential to enhance the profitability and sustainability of the Australian grain industry and grain growers.
Good afternoon, everyone. My name is Anthony Chan. Isola Capital is a family office-backed asset management platform. We invest mainly in North Asia and in Australia. In the agri and food-related space, we deploy capital in both venture capital early stage and also in private equity mid-market. So in Australia, primarily our investments have been really late-stage venture food tech businesses and also upstream pre-farm gate assets. So we actually own about 800 hectares of apple orchards in the country. So we're looking continuously to find opportunities to deploy into interesting assets in the food and agri space.
Hi, everyone. My name's Craig Shapiro, and I'm the CEO of Blue River Group, which is an impact investment firm. And our focus is on the agri-food sector. And we have an investment arm and an innovation arm. Our investment arm is investing into agri and food businesses in Australia. We have a dairy processing business that's in Wagga called Riverina Fresh. It's actually the milk that's in your coffee today. And we have a food service distribution business up and down the east coast of Australia. We have an innovation arm, which is called Bridge Hub. Some of you may have seen the Bridge Hub watering hole, the water challenge that's out there. What we're doing in the Bridge Hub is we're acting as an commercialisation partner for researchers and entrepreneurs in Australia to help drive the commercial outcome and partner all the way through from idea to exit. We're based in Wagga, in Sydney and in Tel Aviv. We're all about global connectivity. That's been one of the gaps in our innovation ecosystem here. And Israel is our first country of choice, and we have a co-founding partner, Eti Levy, who some of you may have met already. She's based in Israel, and we're now looking to expand into other regions.
Cool. And Craig, maybe we could just keep you going. I'm interested in the different areas that different funds are looking at, and the trends and the fashion that goes with investing. But if you had to name your top area of interest at the moment, what would that be?
Yep, that's a good question. Well, I'll probably start with water because we've got the water challenge wall out there. So we're looking across the entire agri-food supply chain. And it's pretty broad. I think a couple of people have raised the question, like, what is agri-tech? What does it really mean? And people have different views of that. Our definition is the entire agri-food supply chain. A really interesting trend in that space is that pre-farm gate is going through to food, but now you're seeing an extension into nutrition, and then the natural extension of that is into health. So I think the supply chain is actually widening, not narrowing, which makes it even more complicated from an investment thesis. But so to try and focus our attention, we've chosen 3 thematics: water, waste, and biosecurity. And at the moment, we're using water as the tool to try and bring to the surface great research and ideas that can solve the problems that we currently face with water. And that's what that water challenge wall out there is currently doing. So how do we, there's so much going on in Australia. We've got geographic challenges because our researchers are so diversified, and there's lots of centres around Australia. So we really need to work a way to overcome the geographic challenges that we have here compared to, say, a New Zealand or a Singapore or an Israel, where you've got compact precincts where everyone can connect really easily, and connection is really a key part of innovation.
Great. And Ashish, we were talking earlier, and you told me that there were 700 million people in India involved in agriculture, which was just a staggering number. Do you prioritise certain areas that you're interested in, and what would that priority be at the moment?
Yeah, so basically, from a accelerator fund perspective, obviously, a venture capital or an investor thinks differently, but there are non-venture capital models as well, which are not bad business models and have been going on for past 3 generations. What we look at, and is an interesting area for us, is one is the online aggregation models around B2B, especially around B2B, because most of the farmers in India are small and marginal farmers. Reaching the farmer is an expensive proposition, and what you can get from a farmer is uncertain. So what we realized is, in most of the cases, farmers don't end up paying for technology. So we've created a layer where the B2B side is basically the institutional guys, the banks for crop insurance, or agri-input companies, commodity companies, etc., being paying customers. So online aggregation models is one of the models we look at.
Cool. And Robert, what about priorities for Artesian?
Yeah, so I think for us, when we're looking at building a portfolio, we want to ensure that we have sufficient diversification with the investments that we're making. And I think about 3 areas that we want to focus on in that portfolio context. We're quite interested at looking at a variety of different types of technology. So we look to incorporate elements of deep technology. So very happy to look at investing in a period of R&D for deep science that has the potential to be transformational within the industry. We then look to balance that with opportunities that are currently in market at the moment, delivering value to customers and farmers. And recently we've been quite active completing a range of investments in the precision and digital agricultural space, as well as the broader agri-supply chain space. And I think the third way we look at balancing out that portfolio is also looking at what we consider to be enabling technologies. So something like communications, connectivity, that when we step back and look at the opportunity across the broader agricultural sector, represent areas where we can perhaps help to unlock further value capture and opportunities for growth by enabling use of the other technology that's currently available.
Yeah, and I think what these answers are doing is underlying that agri-tech is a horizontal, lots of different verticals in it. Anthony, what about your priorities?
Yeah, for us, it's similar to Craig's model. We're trying to build a vertically integrated business that's sustainable by itself. And I think it's very interesting to look at technology, not just downstream, at the product end that the consumer sees, because actually upstream, the agtech solves a lot of problems, including aging. The grower population's typically aging. They don't have the next generation who want to come on board to do the difficult work. So you need to apply technology to help them create sustainability and invest more into growing products. Very often, the growers themselves don't know how to produce downstream products. They don't know how to create a brand. They don't know how to sell the product at the retail level and into the export market. And so they lose a lot of that value to somebody else. So what we decided to do was, let's try to help them by investing across that value chain, building basically an outlet for byproducts. Very often, and in our context, it's apples. What you put into the ground, you don't get 100% perfect product when you harvest. A third of that product needs to be turned into something else that's valuable. So when I mentioned food tech earlier, for example, we invested in a company called Botanica. They do high-pressure processed cold-pressed juices, vegetable-based, fruit-based. They're moving into avocado super milk. They're moving into other products where we can take the byproduct of what is upstream, turn it into something that's not only value-adding, but potentially healthy for the consumer. Likewise, with some of the apples that don't make the grade to sell as a whole fruit fresh to the consumer, we're working with a company up in the Sunshine Coast with freeze-dried technologies to turn that product into a very healthy snack. So it's lightweight, it's got a long shelf life, it's easy to brand and distribute. So we're finding ways to make businesses sustainable by investing in technology along that value chain, and then creating something that's also potentially healthy and exciting for the consumer. So that's sort of what drives what we're doing in that space.
Yeah, maybe I could just add the consumer, the fussy consumer, I think KU referred to yesterday. If you're making an investment decision on the land and the fussy consumer changes their appetite tomorrow, it's a long-term investment at the land, and and I'll use milk as an example. I've got a fresh milk business. Our food service distribution business. We also sell bought in almond milk, soy milk, oat milk. So it was soy milk 4 years ago. 2 years ago it became almond milk because soy was not healthy, and now all of a sudden it's oat milk. So if you're investing and growing almonds or soy, the time frame around that versus the attention span of today's fussy consumer means that it's really hard when it comes to making investment decisions. So similar to Anthony, we're investing in consumer-facing businesses because we use that as our ability to understand what the drivers are and how we should be thinking about where our investment dollar should go, and then what technologies we can invest in to help increase productivity, faster go-to-market, or if you've got to grow something, how can you grow it faster? Because you never know whether the consumers are going to change their appetite next season.
Cool. Hey, just a little change of gears and just thinking about the startups that are here and doing the pitching and the hard work that we know they all do. I just wonder if you guys could think about, your top advice for a startup when they approach an investor and what they should be doing. And Ashish, do you have a thought on that?
Yeah, so being an entrepreneur in the past, I think the focus mainly is on execution, because the idea and the model will keep pivoting. You see, when the big startups, they keep pivoting, so you don't know what the trends are going to happen, but the focus lies on having a plan A, plan B, how fast you do it, do you have the right kind of people to do it. So the key lies in execution. Even when we look at founders, 90% of the time we focus only on execution because pretty much idea is there with everyone around, but how you implement it and how fast you get in there is basically the key.
How does an entrepreneur demonstrate to you that they're good at execution?
So I mean, you can't figure it out. It evolves over a period of time, but basically, initially during our initial couple of meetings, we use our judgment, and in the first 1 month, we deep dive and see what his thinking process is. And so a lot of time in our place, we need to work on developing a technocrat to an entrepreneur, or to an academician to an entrepreneur as well. Or if they don't have, they come with a specific skill set. We ensure that there is a co-founder who's aligned, who's more commercial in nature, and who can actually go about doing a lot of other things.
Cool. Robert?
Yeah, so I think looking at venture capital, it does have a long-term investment horizon, and the partnership between the investor and the startup is going to be a long one. So you need to ensure that it is going to be a relationship built on trust with a good fit to enable success over the long term. And one of the things that we encourage startups to do is to start that conversation and make that introduction with investors early.
Yeah.
One of the things that I think is helpful is to start that conversation at a relatively early stage, and that gives startups and entrepreneurs the ability to be able to check back in along the way and help to demonstrate satisfaction of milestones, accountability, and really help to create that sense of trust early that helps to give investors comfort to embark on that long-term journey together.
Yep. And for those entrepreneurs who are thinking about what does early mean, this is a process that takes several months, right, building that relationship?
Certainly. So, I mean, for us, sometimes things move really quickly, and I think really quickly is, sometimes a sort of 6-week turnaround from initial meeting to investment at probably the earliest, but the reality is it does take a lot longer generally. I think once founders, entrepreneurs, startups have a clear purpose, have a clear sense of the mission and the ability to deliver value to end customers, it's probably the right stage to start socializing that concept with investors, if for nothing else, to take some early feedback on board. But obviously, starting that conversation just provides that avenue for dialogue to help develop that relationship over the time, such that hopefully it will end in an investment partnership.
That's great, and certainly we always encourage entrepreneurs to make that a two-way process, right?
Absolutely.
They're checking you out along the way.
Absolutely, and that's a big part of it.
Yep. Anthony, any top tips for?
Yeah, I think beyond what's been said, I think obviously if you have a startup concept that has a use case and makes sense, then the next step logically is to find a way to develop it and prove to people that there's a real market for it. And so one of the things I think, and it doesn't apply to all startups, but I think in general, one of the things that you should be looking for if you don't need immediate large amounts of capital is to find a strategic partner, sometimes just to deploy that tech that you've got, right? So that you can refine it, you can get the data, so you can analyze it, you can prove to potential future investors that there is an application for this product or service or app. And I think sometimes people are too busy focused on the tech and the investor relationship, which is critical, but you got to go and find somebody who's willing to use and adopt that technology first, so that you can then go on that next leg on the funding ladder.
Yeah, my first tip would be, if you're an entrepreneur, you have to be thinking fundraising from day one, and fundraising never ends. It's a perennial issue, and you have to work out when to prioritize it. The other thing I think a startup should be really focused on is what type of investor you want. So we've got this year here a huge number of investors, and it's probably fair to say I think they're mostly VC. And it may be that VC funding's not the right funding for your enterprise, and that's where that strategic relationship comes into play. There are a whole series of different types of investors out there, and the most critical thing is, so money is not fungible, actually, because they all come with different I guess, strings. And you need to make sure that the money that you're raising and your investors are aligned fully with what you're doing, the vision, and also the time frame. We were talking about this earlier out the back, but what VC is really good at is providing discipline, because a VC fund have investors who put their money into the fund, and so the fund itself is really, its responsibility is to deliver returns to its investors. And sometimes if that doesn't align with the time frame or time horizon of the startup, there's a tension. But it also can create a discipline. So they're the sorts of things as a founder and as an entrepreneur you need to be thinking of from day one. And you need to have people around you who can help you with that decision-making process. Have you got your right term sheet? You need to be controlling the terms and the conversation, because in Australia at the moment, there's a surplus of funding. So if you're a startup, actually you're in a more powerful position. In the US, it's a little bit the opposite. So it's more competitive for funding. So they're sort of some of the things you need to be thinking about as you embark on your journey. Remembering the journey never stops when it comes to funding.
Yeah. One of the features of this group on stage is the different geographies, and you're all well-travelled people. I just wondered if you could contrast what you're seeing in Australia at the moment with other geographies that you're going to, whether it's the US or Israel. Do you see differences in the types of companies that are coming out of Australia, the types of opportunities, types of founders to other geographies? Is it different to India? What's your impression?
So I think in terms of the verticals, pretty much everything looks, so there is precision ag, there are other places, but there is a difference in various regions because of the kind of farmers. So basically, if I talk about India, 85% of the farmers are small and marginal farmers holding less than 1 hectare of land. Here and in the West, even Southeast Asia has similar kind of things. Here in the West, the land holdings are far bigger. So in terms of paying customers, it becomes far easier to scale for startups here. In terms of the quality of founders, I think I've spoken to a few of them, and there was a delegation which came to office last year. They're very good, and what they're trying to do is, and the good thing is they're looking to go global. So I think the key would be in collaboration across different, because at some point of time they would need to go out and scale as well. All these technology companies are looking to go global, and they should be thinking from day one.
Great, thank you. Robert.
Yeah, I think one of the things that we do see and increasingly seeing from founders is that global mindset. Australia is a large geography, and we have a variety of different climatic conditions, different production systems. Where agtech products in particular can be tested and validated, but at the end of the day, it is still one market, and I think we're seeing a greater acceptance, I guess, from Australian founders to really start to think about avenues to scale their products internationally from an early stage, and starting those conversations, at the right point, such that it provides, that mechanism to really start to move when it matters.
Cool.
Yeah, maybe I look at it just at a broad level. Venture is very much also driven by the target market. So population is a key driver. So if you look at China, for example, their venture market's grown dramatically in the last 10 years, both at the corporate venture, private sector side, and also obviously on the government side. And the sheer population that could potentially consume some of this technology or the derivatives from the technology allow them to drive that innovation and fund that innovation. So I think that's a massive contrast. Japan and Korea, where we also spend time, is quite unique in the sense that they are economies that are very constrained by their language. So they generally do not have a huge amount of tech that's in the English language, which is basically the international language. So very often they have great technologies, but the application is very restricted to their own economies, because until somebody can translate that or apply that in a more global market, it's very difficult to capture that. So a lot of times in academia and in research, their technology doesn't really get beyond that. And then finally, for Australia, and I think in particular the context of ag and food, I think we're in a unique situation here because you've got a huge geography, right? Huge land, a lot of resource, but we have a very small population. So we've got a small population of ultimate consumers here, but we are in the southern hemisphere, right? So certain types of products, especially fresh, as long as the technology is right, we have a window, which is the complete opposite of what's in the northern hemisphere when people are supplying. So there are ways to take advantage of that. And then also because of the lack of population and maybe desire for people to be in the upstream ag space, you need more technology to create more productivity, better yields, and better outcomes. So it is quite different depending on what you're looking at.
Very quickly, because this is telling us we're over time. I'll just maybe some snippets from Israel. The average age of founders in Israel is much higher than Australia. So a little bit more grey hair. You're never too old to be a founder. And the other trend, and this came through when I was there in September, they had a whole agri-week. They had an agri-tech event, which was sort of farm gate, and they had an agri-food event. And they probably had twice as many people at agri-food as they did at the food tech, as they did to the farm gate, the agri-tech. So we had a panel here on alternative protein yesterday, but I think we're a little bit behind the curve when it comes to what's happening in the food and the nutrition space. So we're still very much focused at that earlier stage. And Australia is a little bit behind. Our agri-tech community is really just evolving, and one final plug for the Australian Agri-Tech Association that's just been formed, and we think that's part of that evolution of the development of the market here in Australia. So we encourage you all to join up, but they're probably the key differences I'd highlight.
That's cool. All right, really appreciate you guys taking your time. I hope that was useful for people. If you are an entrepreneur out there looking for money, hit these guys up before they get out of the building. And thank you very much.
Thank you. Thank you, Dean. Thank you, Robert, Ashish, Craig, and Anthony.